Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 4 weeks ago I highlighted a bright pink July 24 to date rectangle pattern, currently 952 to 1095. The top size for this pattern is also capped by the 50% Fibonacci line of the May to August 24 move at 1098 and the 61.8% absolute Fibonacci line at 1106. Separate to this, I brought up 4 weeks out the idea of a February to March descending wedge pattern. The primary target on the downside was easily achieved, but we still had opened the secondary target X down at 966. This week, after putting on notice of retirement last week, I have decided to retire this target below after this commentary, given what's happened since the break lower, or rather what has not managed to happen after the break lower. The congestion I had pointed out, mainly between mid-October 24 to mid-January 25 in the 990 zone, is still good, and I'll keep a watch on it. We saw a dip down to this support earlier this week and a pullback up since, though the narrow areas of moving averages, as most of them are between 1022 to 1025. Now, we have recently seen gapping attempts lower that have failed at the 990 zone. We have also seen a weekly key reversal up 2 weeks ago that was followed last week by an immediate countering weekly key reversal down, which has not lived up to its promise, and we're back up at levels I was talking about 2 weeks ago. All I can keep emphasizing is that we are within a large July 24 to date rectangle pattern. Admittedly a very large pattern, but one I think which is the core pattern to watch here. Chicago soybean meal. The main recent pattern driver here in this market had been and still is just about the dark blue May to October 2024 bearish shift pitchfork. The market is running for a fourth time back over the upper time, currently at 301.50. After spending the last 2 and a bit weeks below it. The previous 3 upside breaches had been just that, breaches, not full-on proper breaks higher. However, I have linked the recent highs into a bright red downtrend, currently at 309.20, which ties in nicely with the descending gold long moving average, currently 310.60. Now, prices have today pushed up over the mauve medium moving average again, currently at 302.10, though not as yet closed over it. We've also seen prices try and test the overhead green short medium moving average, currently at 304.30, though not as yet punched through it. I'm beginning to wonder if the action this year is becoming a type of descending triangle pattern with the bright red downtrend topside and the 290 zone below as a base to it, or maybe some other pattern. I'll ponder on this some more. In the meantime, we still have the previously highlighted late December 24 to mid-February 25 small bull channel that became a combined ascending wedge pattern and head and shoulders top. The primary targets below for both patterns were reached, but it still left open and live the ascending wedge pattern's secondary harder to reach target X1 down in the 265.60 zone plus an interim target X4 in the 285.30 zone below. For the head and shoulders top pattern, the secondary target we have a harder to reach target X3 down in the 280.10 zone. These secondary and interim targets below have been hard to reach, and I'm now considering retiring them after putting them on notice of retirement last week. However, as I suspect we may now possibly have a descending triangle pattern here, so I'll lay off retiring them for a little while yet. I should also point out that we are today just above the 282 to 300 congestion that's been previously highlighted, dating from between April to August 2020 and reprised again back in August and November, December last year. Finally, this commentary would not be complete without my discussing the elephant in the room, or at least the elephant in the room which has stayed there throughout 2024 and also resonates now into 2025. And that is the annual key reversal seen here at the end of 2023. I said, and I'm afraid I have to repeat something I've highlighted now for 94 weeks, so coming up for nearly 2 years. And I quote, "I only need to remind you once again of my words when I pointed out the Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023. I've been living in the shadow of this pattern ever since. End of quote. I've also added ever since, and I quote, "If there is only one thing you take away from my musings, let it have been those words." End of quote. These last few weeks have shown that the shadow cast by that supremely significant pattern so long ago still darkens the skyline of this market. Chicago soybean oil. A continuing theme here as per the last 3 weeks of a somewhat clearer chart when compared to earlier weeks. The main pattern here is still the bright red shallow bullish shift pitch hook for the mid-September to late December 2024 move. The market is right now in between the bright red middle time below, currently at 45.77, and the bright red upper time above, currently at 50.88. Okay, so recently with changeover we saw a small gap higher 3 weeks ago, followed by a further move higher being part of a small reverse head and shoulder bottom formed during March. Prices moved up over the congestion at 42.52 and 42.67, being the May and April 2024 lows respectively. They're more rapidly up through the flatlining long moving average, currently 43.58. Over the also flatlining medium moving average, currently 43.88. The significant 50% absolute Fibonacci line at 43.80, and that is an important one. And the April 2014 high, as well as over the May 2023 high, low at 44.68, and the 2014 high at 45.04. Prices then accelerated higher over the bright red middle time, peaking last week at the significant 38.2% Fibonacci line of the March 20 to April 22 move at 48.95 before dropping down this week as far as the flatlining green short medium moving average, currently at 45.04 on the May 23 low, and for the other moving averages and 50% absolute Fibonacci line below. Now going back to the 38.2% Fibonacci line at 48.95, this resistance is significant because it has capped the previous two major rises in July specifically and November, ideally November 2024, and I suppose the almost recent rise is seen in February this year. Right now it continues to be a valid resistance. Now, as I've pointed out extensively in my previous video commentaries, the market has seemingly decided upon a huge, large-scale June 24 to February 25 triple top pattern that could be extended now to June 24 to April 25 triple top pattern, offsetting what could have been a huge June 24 to February 25 double bottom, or even a huge June 24 to March 25 triple bottom. So once these patterns have offset each other, what have we got left? Well, just that main pattern all along, the bright red shallow bullish shift pitch hook. And that's it, at least for now.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.